the upcoming panel discussion on Futuristic CFO, how is the present shaping the future? We'll find out the key challenges confronting the finance function. Key forces shaping the finance function are digitalization, analytics, and the value proposition of finance. Who is a futuristic CFO? Let me hand over to our moderator, Amol Dete, editor, ETCFO, to take this discussion forward. Over to you, Amol.
Hello and welcome back. Once again, moving ahead, I have another panel discussion of the day today. And the session is Futuristic CFO. How's the present shaping the future? So let's discuss the future with the best minds from the industry and let's learn how actually they are preparing for the future and how do they see the future. So I have with me Niranjan Banodkar, Chief Financial Officer of Yes Bank. Niranjan, glad to have you.
Hi, Amol.
Sure, glad to have you, Niranjan. My next speaker is Mr. Pankaj Madan, the Group CFO of InterGlobe Enterprises. Pankaj, glad to have you.
Glad to be here, Amol.
Thank you, Pankaj. My next speaker is Mr. Nitin Parekh, CFO, Cadila Healthcare Limited. Nitin, glad to have you.
Hi, thanks for inviting.
Thank you, Nitin. And my next speaker is Mr. Ruchit Agarwal, the co-founder and CFO, Cars24. Ruchit, glad to have you.
Thank you for inviting. I appreciate it.
Thank you. So, gentlemen, the basic question that we have today when we discuss about the leadership, and actually that is an integral part of a CFO, but it has evolved a lot in last 2 years. So the basic question everybody is asking today is, how the future looks like, what is there in the future. So let me take this common question with all of you first, and I will start with you, Niranjan. The question is, how do you see a shift in leadership, and what are your key priorities as a CFO for 2023?
Thank you very much, Amol, and thanks for having me here. In fact, it's also an honor and privilege to be along with my co-panelist, and I'm sure we're going to have a great discussion here. Just coming back to your question, Amol, if you look at a CFO that's kind of going through some of the motions currently, right, and it's also reflective of how businesses are coming out of the pandemic. I think what we've seen is there has been a focus on just moving through the business, surviving, and actually moving out of those businesses of these cycles at this point in time, right? So the focus has been a little bit more short term to begin with, but at the same time, what the pandemic is also doing is also providing an opportunity to the CFOs or businesses at large to use this to invest for the future and create scale for the future. And I'm just giving an example that we actually used at Yes Bank, and maybe that will kind of drive the point. When we went into the lockdown, and this was also actually immediately after the moratorium that was imposed on the banks, so literally we were in a very tough spot. We actually went through a very detailed cost transformation project. So I think the fundamental question that we asked ourselves was, when we look at banking, is this how we conventionally want to run banking? Then few things we will obviously have to work within the guardrails of the regulation. But I think at every process within the institution, we actually said that, is there a way in which we can make this process more efficient, both for internal stakeholders as well as external stakeholders? And in fact, a large part of that process was led by the CFO. And at that point in time, there was another gentleman who was driving this. But I think the important point here is that how can CFOs really push through this opportunity that, let's say, some of the questions that have been posed during the whole pandemic can be used as an opportunity to drive newer businesses. I mean, we've seen from a banking landscape standpoint, again, technology and digitization really go through the roof in many ways, right? Question is, again, are we using that as an opportunity to scale up? So yeah, I think there was more very short-term response for CFOs to kind of survive through the pandemic. I think that was an immediate need and necessity. But having addressed that, really, it is also about using the opportunity to build long-term franchise. Now, 2-3 key points I wanted to drive there. What's happening is that business cycles are getting shortened. So in many ways, you will find that what works with consumers or what might work with different businesses, I think the likes, dislikes are changing in a very short period of time. And therefore, what investments you make today may not necessarily hold good after 3 or 4 years, right? And therefore, when you wear the CFO's hat, I think the critical question would be that maybe some of the investments you make may not hold good after 2 or 3 years. So I think one of the things that CFOs need to really, I would say, absorb and maybe learn in some ways is to really have some tolerance for failure of some of the investments, but really with the objective of continuing to sponsor some amount of innovation and investment in the future. I think that's a trade-off that I think CFOs and businesses at large will want to work through. I think the second area I believe, and that's I'm sure everyone's kind of really looking at that as an important aspect, is on the ESG front. I believe if ESG is not something that businesses are going to be following, there are going to be implications in the way the valuations or the stakeholder perception will play out. And therefore, I really believe that CFO in their role are also best positioned to actually take forward the ESG agenda for institutions. And I mean, I'm very pleased to say that at Yes Bank, we've done that. I also happen to lead the ESG agenda. So I'll take a pause here and happy to hear other thoughts as well. Thank you.
Good points, Niranjan. And I think we all understand how the struggle and the challenges that the Yes Bank went through. But what is remarkable is whether it's the regulator support or the government support, the bank is there standing tall. That's more important, Niranjan. So good points on that front. Short term and then the CFO's innovation when they wear a different hat. I think valid points. So after taking a financial view, let me move towards aviation now. And Pankaj, give me your perspective in terms of what are the key points that you see going ahead in 2023. Why I'm saying gentlemen 23 is because the 2022 planning must have already been done, and as WHO says that pandemic is going to be here in 2022, and so that's why I'm taking a view of the next year. Yeah, Pankaj, please go ahead.
So Amol, I think at InterGlobe, because all our businesses are around travel and hospitality, so we've been right at the forefront of disruption. And in February of 2020, I think it was very clear to us that we are facing a huge disruption. We don't really crystal ball gaze and look at how the external dynamics will sort out for themselves. So we never really kind of so much speculated on when COVID will solve for itself and when the revenue will come back and so on and so forth. But of course, what we focused on was on what can we control, and it was cash flows, it was efficiencies, it was bringing down cost, and the great thing is that all our businesses, be it Indigo, be it our hotel, hospitality, technology, GSA, pilot training, all these businesses are market leaders, very well capitalized. So it helps when you enter a crisis with a strong balance sheet. Of course, the key is that you preserve that same strength as you tide through the crisis. I think what we have achieved is, and this pandemic has forced us to achieve, is a very sharp focus on efficiencies and productivity. And as I look at 2023, I expect that we'll be able to retain most of those efficiencies and productivity. So we have a sharper model that can that's well positioned for the future. I think the other element is that in this whole kind of journey, we have not lost focus that post-pandemic, I think this is the biggest disruption the world has seen, Amol, that in human history, maybe after the World War I or World War II. So I think it would be naive for anybody to believe that the customer preference will not change. I think it would change forever. So therefore, we've also taken the time to redesign the product. be it, for example, if I talk about hotels, the customers have a different expectation now. I mean, your hygiene, your F&B offering, how do you position it? How do you kind of serve it? Your even your business pleasure makes everything is changing, and you have to kind of redesign the whole thing so you're ready for the new customer. So that's the other element that we've been working on. We need to sharpen that even further, so we are ready for the new customer in 2023. So that's the other aspect. And I think also, for people who successfully tide through the crisis, there are many more opportunities that the wider economy and the wider industry will open up, and it throws up. I think it happens after any large crisis. And I think we just have to be cognizant of that. We just have to keep an eye on that and look at, how do you capitalize on those new opportunities that will come up, Amol? And therefore, you make up on, whatever, has been the setback arising out of the crisis. I think the other element is that a lot of focus on talent. I think, we've been focusing on talent. It's been stressful times, but it's also about unlearn things that have worked in the past, relearn stuff that would be more relevant for the future, reorganize, and really it's just all about having the right set of people. Because I think one thing, Amol, that this crisis has taught us is, we've been talking about terms like VUCA world and all. Now, I don't know, maybe we need to coin up a new term, but it's uncertainty of an unprecedented dimension. And I think we just need that kind of a skill set where, we can deal with fuzziness, we can deal with complete ambiguity. We do not strive for perfect information, because if you're getting perfect information, you're possibly too late to the market anyway. Yet at the same time, as finance people, you want to have the financial discipline sense, so you don't bet the core, and therefore how do you bring everybody together so you have the right balance, and you can just get the ship moving in the right direction in a very foggy environment. And that's, I think, gonna be the future, and that's kind of a soft skill which we have cultivated. I think the times have made us cultivate that, Amol, if I may say so.
I think many key points that you mentioned, I think, Pankaj, relearn, reorganization, and reorganize it, returning most of the proficiencies. I like this, we need to have another term for VUCA now, because we are already in the VUCA. Nice, very meaningful thoughts, Pankaj. And let me move my focus to now healthcare. And Nitin, I would like you also to share your perspective, your key points for 2023.
Thanks. I think my learned other panel speakers have already brought in some very interesting points, and therefore let me touch base this from a different angle. I would like to mention that for 2023 and beyond 2023 also, the CFOs will need to cultivate both certain hard and soft skills. And let me categorize into 4 different roles. The one is a role of a strategist, where he has to partner with CEO, looking at the future, along with him, setting the mission, mission, vision, as well as the long-term objectives. But these long-term objectives need to be quite flexible, keeping in mind a very, very dynamic situation, the way it happens in the outside world, including change of business models, change of competitive scenario, change of regulatory regime, etc. So the long-term, but with flexibility, is the new mantra. And whether it is a build strategy, borrow strategy, buy strategy, all the fronts, pharma, you would be aware that we have a lot of growth through inorganic route also, and therefore in all the 3 fronts he has to partner with CEO. Having said so, pandemic has taught us the importance of business continuity plan, disaster plan, running various scenarios, and there he has to be a good technologist. So tech-savvy person with passion for data as a science for decision making, I think is very important, game changer. He has to convert words into numbers and numbers into words. I think that's the new art and skill that he has to learn. And to really discharge that kind of role, he has to be an innovator. And to be innovator, he has to be obviously curious, confident, courageous, and creative. then only you will be able to do that role. And have a systematic approach, in a process approach. For that, he will obviously need to do a lot of rationalization, simplification, standardization, automation. So in all these areas, we'll have to contribute. And as a leader who is considered next to CEO, has to be a very collaborative person with very good, exceptionally good communication skills, ability to take the organization along, talk about the real picture of the organization to enable the right kind of decision making. Rajan every time talk only about the rosy things and very optimistic things. A realistic approach to what's happening in the company, what are the challenges ahead, and then make the decision making process very consultative and collaborative. I think that would be a very important skill for CFOs to show in times to come. Thank you.
Okay, remarkable points, Nitin, and good opening remarks from all of you. Now, Ruchit, you heard the gentleman who's representing a very traditional and cultured company. Now, your company is absolutely different. So, are your views different on the leadership and what you see in 2023 from the CFOs that you just heard?
Yeah, no, I think this is super helpful for me personally. Also, I would say to listen to these things. We are a startup, and so we have a little bit different challenges in life today, I would say. When I was thinking about this question, that three things kind of jumped out to me as well. Some of it is already covered in a way and from what our peers are saying. But look, I think first for us is just as a startup, business partnering becomes very important. So this obviously something that all CFOs do already, right? But to me, there's more room to grow and innovate here, at least in the startup space. Why? Because look, our models are unique and innovative, right? They're solving for problems which old age businesses haven't really thought of, perhaps, right? So sometimes these business models are just hard to understand. Some of them, these business model takes time to evolve. And sometimes you prioritize growth over profitability. Sometimes you're chasing valuation, which are not traditional metrics that people would chase in an established company. So the first critical set that I feel all CFOs like me need to develop is just a deeper understanding of business, right? Which means you understand the operations, the nuts and bolts, the analytics behind business rather than just financial analytics. The second was much like what I think Nitin was saying. See, I would love to have the ability to predict and therefore avoid future problems by taking certain actions. Look, as startup for the last 6 years, even if I exclude the initial years, last 3 years, despite Corona, we have grown 100% year over year, right? So, and we still lament that we are growing very slowly, right? So this is very important implications for how to plan ahead, how to actually deliver on those numbers, because 2 months here and there, and we are off by 20% on our targets. And similarly, it is very important to be able to raise and allocate capital constantly. So, I'm sorry. So these kind of decisions, how to raise capital, how much to allocate to different departments, how to make decisions, how quickly to digitize, when do I switch from Tally to SAP? By the time I make up my mind, people tell me I have to move to SAP HANA. So it's like, it's anticipating problems and solving for that becomes critical. The third point, which I felt, perhaps is as a CFO, we are all numbers guys, right? At the end of the day, we are chartered accountants, or most of us are finance guys. What I have realized personally is that I lack empathy, right? Corona tested us all. So yeah, we are talking about cost cutting and rationalization, and hopefully that's part of who we are. But we, just like any other company on the planet, we were making plan C and plan D, and each of those plans basically required a rationalization of headcount to a large extent, right? But we eventually decided not to do it, and my co-founder Tag helped me realize that these people will not get jobs anywhere. And so we decided to keep all of them, and that was just an empathy. And when we did that, we are today better for it. We have seen a lot of trust and loyalty in our teams. So my conventional CFO mindset would have said, look, rationalization of cost is what I should have done by perhaps letting go of people. But my co-founder Tag helped me realize that empathy is also very important skill to learn, and sometimes that long term over short term may help. So perhaps a little bit different than our panelists, But that's how I would say it.
No, I think the whole idea is to obtain the different perspective, Ruchit, and I think
Sure.
that's what we have a different people from different sectors and the startups and a traditional company. I think it's a
Right.
nice views, Ruchit. So, gentlemen, let me ask some specific questions now, and I will start with you again, Niranjan. So you are representing a sector which is highly on a digital. In fact, everybody is saying that there won't be a banking, there won't be only tech companies going ahead, or bank will become a tech companies going ahead, right? So, what kind of pressure as a CFO are you facing? Are the CFOs and board asking you also to make all the presentations in QR scan code mode or something like that? Do they expect you to also perform like instant payments kind of thing or something like that?
No, look, I think to be honest, what I did get was a significantly high budget for technology asked from various businesses. That's for sure. But I think that is where I was earlier kind of alluding to is, and I kind of completely agree with Ruchit on the point that there has to be a tolerance for failure, in the sense. I mean, I'm using. I think Ruchit used a different example for that, was to say that can I allow to continue with the cost with a long-term benefit, right? I think that's somewhere the business hat, the strategic hat that the CFO will have to wear. But I think, Amol, to the specific question that you asked on technology. So I think if you look at least in the financial services, the technology intervention that has happened actually over a period of time. And it's something that we've not necessarily given heed to, because I think some of the fulfillment of banking services now at the consumer's end has actually shot up the roof quite meaningfully. But it's not that it's not happened over a period of time. Starting with cash dispensers as ATM machines replacing tellers, check clearing through magnetic fields, back-end processes, people moving on to core banking, I think was a massive change in the way banking was done, right? I think what we are finding now is that the rendering of banking products and services is now kind of getting subsumed in the actual exchange of the underlying goods and services. So what I mean by that is that more and more, if I am buying a car today, the loan or the credit of that may not necessarily be a distinct transaction from here on. I think eventually you would find that the credit for that transaction will get subsumed as part of the sale of the transaction, which is the car, right? Number one. Number two, what we are finding is that at a banking level, the nature of credit, and I'm talking about still small pockets of opportunities yet. I think we've not seen the scale so far, although there is, of course, a lot of talk around it. But I think the nature of credit is also becoming more nuanced. So, for example, I mean, historically, we would all say that there is a need for a personal loan for a credit. That's kind of moving to, if I'm buying a TV, I need a credit, or if I'm buying specific, if I'm going on a holiday, I need a credit. So it is getting transactional again from the conventional. I think what we are finding is that technology partners, startups are able to provide a better service to the customers, to the consumers, end results, right? But that doesn't mean that the role of banks is not there, right? I think what we are finding is that as an institution or as a bank, we have to acknowledge that there are fintechs out there who are doing a far better job than what banks could do, right? One is to acknowledge that, and therefore, instead of trying to look at them as competition, try and see how we can partner with such fintechs in a way that you are able to possibly be omnipresent across where all your eventual customers could be, right? I think because what I'm trying to say is that at some point in time, banking is going to become invisible, and we don't know at what stage that will happen. Maybe another 5 years, maybe another 10 years, right? But it will at some stage, and therefore you need to be omnipresent wherever the consumer is. And I think what we need to solve is, are we providing right technology investments to be able to create platforms that the fintechs of the world, or anyone who is providing services to consumers or customers, they are able to plug and play with the banks more easily. And therefore, the infrastructure needs to be strong. They needs to be scalable. You can call it plug and play. So investments in that nature, if they are happening, we are happy to support, sponsor. So just to give you a simple example, today, Yes Bank deposit market share is about 1.2%, right? But when you look at UPI, which is a unified payments interface, we actually have a market share of about 44-45%, which means today, 1 out of every 3 transactions actually gets processed on the infrastructure, technology infrastructure of Yes Bank. So I think it's important that for us to be able to do that, you invest in the infrastructure and scale. And I think that's one area we will continue to invest, even if it means in few things we don't get a payoff in the near term, because that's the way we believe banking is heading.
Sure.
Niranjan, in a lighter tone, I can say that if the banks become invisible and credit for salaries become virtual, that's okay. But salary credit should not become invisible.
Sure, that should never happen.
Actually, if I may, I would love to add to what Niranjan said. We as a startup have seen that transition happen with all our partner banks. So we also have an NBFC license. I'll give you a very simple example. When I sell cars, I'm in the business of selling used cars to consumer like you and me. Then in India, when I'm selling a used car, the financing attach rate is around 15%, 1.5, relative to a new car, which is around 80%, where 80 out of 100 people when buying a new car get financing. So one has to wonder why it's so low in the used car space. It's the same consumer who are doing it, right? For us, through our NBFC, we are able to service 60%. So what that means is 60 out of 100 people buying cars from me are actually taking loans. So clearly that shows that there is a market for it. It's just that the established financial institutions has not been able to serve it. To Niranjan's point, what we have done is we have partnered with a bunch of financial institutions saying, look, I can never match you in cost of funding or in collections. Just there's no way. So let me partner with you. Let me the front end of the consumer. Let me originate the loan for you. And why don't we take the advantage of your lower cost of funding as well as collection prowess? And to us, that has worked beautifully as a business model over the last few years.
Okay, sure, Ruchit. So, Pankaj, let me come to you. And as Niranjan said that banking is going to be invisible, I'm sure your sector is not going to be invisible. And my question to you is more about the futuristic. And I'm sure in your sector you plan more about future, because the traveling is all about planning and everything. So, what is your sense as a CFO in terms of futuristic CFO? I mean, is it in sync with the responsibilities that the CFOs handle today? If I ask you to have your opinion on that. Why I'm also asking this is today's world is completely changed, and you yourself said that the VUCA world is over now. So considering all these dynamics taken into consideration, how do you see the whole future for your sector now? I mean, as a CFO.
So Amol, I think a couple of things. I think first of all, of course, I just talked about the fact that I think, post-pandemic, customer preferences will get reshaped. The product and the offering has to align with that. I think, all of us in our respective industries have to kind of see that coming and reshape, redesign. Efficiencies and retaining efficiencies is a given. And, I think Niranjan made some really good points about technology, and absolutely with all the disruption happening. All I'll say is that I think, technology, absolutely, that's a place where we make investments and, we put a lot of focus, but we do it, with the perspective that technology is not an end in itself. It is solving for something. We have to know what is it solving for, and therefore you have to prioritize. I mean, at the end of the day, it's a resource allocation, not only in terms of dollars, but also in terms of people, in terms of reorganization, in terms of, the relearning and so on and so forth. So, are you solving for efficiency? Are you solving for better customer experience? Are you solving for, better analytics and, kind of so on and so forth? And also, therefore, the buy-in internally of all the stakeholders, so that, internally also there's an awareness and conviction that what you're trying to do, because you can, the danger is you do it as a silo, you do it as technology or finance, and then you realize that there isn't really a buy-in because there isn't really an understanding. So that's one aspect I think we are very cognizant of for there, because a lot of these projects otherwise can fail. And I think the other element is that what cannot be replaced or replicated is your interface with the key stakeholders. Internally, it's about people, it's about culture, it's about interface with your customers, it's about interface with what's happening in the market space, and just keeping an eye on that. And in fact, one of the things that we talk a lot about is just look out for weak signals, because if I may just Amol, give you an experience from one of my earlier roles. When I was in 2008, I was CFO of Walmart in India, and those days it was all about brick and mortar, and we kind of rolled out all the supermarkets and the hypermarkets and the cash and carries. We could see that 2 years down the line the game was changing to e-commerce. It's not that we could not see that, and of course we were thinking about it. We were kind of incorporating that also in our strategy. But I think where with hindsight, where we misread that weak signal is that it's not about simply incorporating the new game. It is about cannibalizing almost completely what you're doing now, because the game has changed for good. And what happens is that you're so deep into it that you just rationalize to yourself to say, I'll continue to do what I'm doing. And by the way, the market is telling me this is the KPIs that I'm doing so well. And by the way, I will also incorporate what I see, and that's just something which in this very uncertain kind of a macro environment, you should always be reading and bringing it to the organization. And it's a collective leadership responsibility that we all finance folks have to say, hey, what I see as a consequence, does it even make sense what we are doing? Or should we just stop? Should we just pause? So yeah, I'll just pause at that moment.
Okay. Very valid points on the e-commerce point. I will come back to you in some time in the next round. But let me bring Nitin here. And Nitin, the question is more about the fundamental side, where the CFOs plan a lot. Crystal gaze, crystal ball gaze happens every time. You look at the macro and micro indicators. But as we say, as Pankaj put it rightly, that we have to coin a different term for a VUCA world now. So, and the whole idea is, whole the businesses have been, what you can say, shortened their cycles. So in business cycles have shortened. How do you see the function of forecasting in your sector? How are CFOs, you think, crystal ball gazers today?
Yeah, I think a very interesting question, because the definition of short-term, medium-term, long-term has been fast changing. Now, 6 to 12 months is what short-term, maybe 1 or 2 years medium, and 3 years beyond everything is long-term, which earlier people say 5 years plus is a long-term. So all these terms definitions are changing. Let me give example of pharma. When we do forecasting of product SKUs in different parts of the country, I'm only talking about India right now. So then there are number of states, number of points, and number of thousands of products. And to do forecasting at a product SKU level is very difficult. And the forecasting efficiency over a period of time we have been improving with help of technology. So a lot of optimization models also we are using. We look at statistical model, we do forecasting, look at the predictive part of that, and then to some extent prescriptive part of that. Now this is required because we need to balance both the high inventory risk or the interest associated with that, cost of expiry, and also stock out situations. So it's a very, very dynamic way we need to handle that. And we use this power of technology and power of this better forecasting during this lockdown time and beyond. Also now we are continuing when in March 2020 only, when the lockdown was imposed, we tried and captured across all our geographies across the globe, all our subsidiaries included, on a daily basis, on a priority based, all the payments, all the receipts. And started forecasting based on the each and every entity, given its credit period to receivables, credit period to suppliers, inventory levels, etc. and started monitoring this on very four important variables. These four important variables were: one, collection versus sales versus production versus purchase, and purchase versus payment. If you monitor these four variables on a daily basis, I think you get a very good handle on the working capital part. And not only that gave us good handle in terms of working capital, but it also helped in terms of understanding the insights in terms of the business is happening across the globe, in the different parts of the US, what's happening in Brazil, what is happening in Mexico, what happens, Philippines, what happens. In fact, sitting in India, we are not so much tuned in terms of, because it's handled by our local country financial controller. You don't go into that detail. But we have started monitoring these on a day-to-day basis with a complete control here at centralized level. I think there are a lot of insights. When the lockdown came, we first said there's a part of contingency planning. We can't forecast, how long the pandemic will continue, what kind of, damages will bring. But fortunately, since we are, as a pharma company, continuing business operation, but keeping a contingency in mind, I had tied up $200 million of, lines in US with all international bankers, thinking that if we require, what will happen. But with the kind of controls and the forecasting that we did with the help of all my divisional finance controls, country finance control across the globe, not only we had not to use anything out of $200 million line. In fact, in 2021 year, we reduced our net debt by 2,000 crore rupees by this better handle on the working capital. So I think it has worked wonders. And forecasting always will remain, a goal which is always to be improved. Is a journey. We will not be able to achieve anything. But I think with a lot of use of technology, analytics, embedment, predictive part of technology, and to some extent the prescriptive part, we can certainly improve a lot in terms of your decisions and make good amount of money and contribution to the company.
Very valid points, Nitin. And let me bring here Ruchit, who partly spoke about, technology and the digitization. So Ruchit, the question is in two parts. One, are you having an upper hand here in terms of you're already in a digitalization mode, right? I mean, where the other companies have started adopting digitalization aggressively, you started with the digitalization. So do you have an upper hand here, and how do you actually take a benefit out of it? At the same time, can you also tell me, when the key forces are shaping the finance function and digitalization, how actually the predictive analytics, creating a value proposition for finance as such for you and your company?
So great question. Look, as a startup, right, you're born with the understanding that technology has to drive scalability. So the life cycle of any startup in India or globally, I should say, if I make a generalized statement, is you identify a consumer problem statement, you figure out a jugaad way of solving it, right? A shortcut way of solving it. And then once you figure it out, there's a product market fit, right? This is a solution that makes sense. It's solving a genuine problem and it can be scaled up. That's when you start marrying it with technology so that scalability comes. Unfortunately, what I have realized is, and here I may not be, it's hard for me to generalize, but in most startups, in startup arena that I speak with, in the CFOs, all this digitalization, online, all of this is happening on the pure business side. The back, finance is still backend and still running on Excel and Tally, and then some form of fashion of, Oracle or SAP. So digitization from a finance angle, I feel is still catching up, just like the way, old economic businesses are catching up. It's the front end, it's the consumer facing interface, the business side of things that startups have done a great job at digitizing. Now, as in our company, as we transition to a digitized finance, I think building on where Nitin left, I think forecasting is very key. But my realization has been to forecast. A forecast is only possible once you have the right inputs. Otherwise, you can create any forecast, right? So the biggest challenge I have faced in the last 2 years is having that granular set of data that doesn't even exist because we're not capturing it. So the first to me is to, we need to start capturing data at this granular level. It could be just via simple Excel, but we have to just start doing it. And then we can think about automating it, creating a digital approach around it, which of course solves for efficiency, accuracy. The second is, startups attract a particular kind of people, right? Younger people who want to try and prove something, who work very hard, who are just, kind of, I wouldn't say we are attracting CA rank ones, I would say. Maybe people won't agree with that, but I think the second is just the ability of the team to understand data and draw insights from it, right?
Right.
We need people who can interpret the data, figure out what happened, why it happened. Then we should figure out what could happen and what should we do about it, right? So those are like some of the basic questions you would ask by once you have that model ready. And to do that, the biggest hurdle I see in finance is simply the training and investment you need in your teams. We need to impart new skills to your people. We need to navigate them from day-to-day operational work and give them more time so that they can actually understand data and take decisive actions. So
Right.
to me, that's probably something which addresses the second part of your question.
Okay.
Just one point, Amol, I would like to make here is that when we talk of forecasting, we also run different kind of scenarios. So obviously, you don't get one answer, and sometimes it's a very complex situation. For example, during pandemic, along with various other industry players, we started giving additional credit compared to the normal credit. Normal credit is we give 7 days credit for the same state, 21 days outside the state. But during pandemic, we started giving let's say up to 30 days, 45 days in some cases credit. And we also came out with a cash discount scheme that people who make cash discount means they want to make on the same day payment will get some discount. Now it's a very, very dynamic scenarios we are running, that what percentage of my customers will actually go for additional credit, what percent will actually go for cash discount, and then there again say this is a very aggressive saying that large part of people will actually go for cash discount. Now it is a very positive side, and then worst situation that almost nobody will go for cash discount and everybody will go for additional credit, which means very large volume of account receivable. So we were running all these, and every month looking at the inputs that of the previous month, we are modifying our forecast. I think very, very dynamic and very interesting time we had.
Constantly modifying things. Noted your points, Nitin. So let me ask one more question to all of you. And as we understand, and it's a modifying time, and we have to transform every day almost. And I can understand. For example, if you look at Pankaj, he must have planned something for next 3 months, and suddenly there is a lockdown, and all the tickets are cancelled. Right? How tough will it be for him to, in fact, refund and everything? So the question that comes to my mind for all of you now is, what is it that the CFOs of future should have going ahead, considering what we have seen in the present, which is still, I won't say terrible now, but still not over. So what is it that one thing, or maybe few things that the future CFOs should carry with themselves? Then only they will be able to build the company, or maybe make the company sustainable going ahead. And Pankaj, I will start with you.
Amol, I'll say that, and I think we in some way just talked about this a little earlier as well. I think the first one is that there is a very big responsibility that the CFO has, because I think CFO, other than possibly the CEO, is the only person who has end-to-end understanding of the financial implications on the business. Because you could have initiatives that work wonderfully well for operations or sales generation, etc., but that may have a corresponding adverse implication somewhere else. So when you look at an end-to-end view, it is the CFO. So I think the key is for CFO to really demolish all the silos. There is nothing like a finance function in isolation. I cannot think of any action in a business that does not have a financial implication. So therefore everything is fair, and bring in that financial leadership. That's really the key. The other thing that we already talked about is just really be able to navigate the ship in this very fuzziness, uncertain environment. And that means having a 360-degree view. That means not just be inwardly looking. Just a word of caution about these budgets and forecast and KPIs and advanced analytics. While I think every organization has it, it is there, and we need to have it world class. but they can be very inwardly looking. Sometimes they can be somewhat deceptive. You could be doing year-on-year favorable growth, or your KPIs may be looking green. But I think the key is to also look out, do a 360-degree. What's happening in the macro industry? What are the changes happening? How's your competition doing? What's substituting your products? Where is the customer preference going? And as a combination of all of that, are we doing well or not? So I think, having that view and bringing those discussions in is really key. In other words, having a balanced external focus as well. And, and then just dealing with the disruption. Technology is one aspect, but there are multiple. The other one, I think even a larger one, is that how do you keep your teams to keep on learning new things and keep on moving them to a discomfort zone. And Amol, nobody likes it. Everybody likes, all of us, we just get into a certain way of doing things. It just sounds very comfortable and cozy. And how do you push the entire team out to that discomfort zone continuously? Those are really the key challenges, I would say, that and the skill sets that are required.
Sure, very valid points, Pankaj. Nitin?
Yeah, I think CFOs will need to constantly, upgrade themselves from knowledge, skills, attitude, all the angle. And I will summarize this in one question that the CFOs should always ask themselves that if I come in the interview of this company once again, would I be selected for the same designation, same salary? Right. Wow. And there are three important challenges I would like to talk. One is, the shifts in the market, the way the business sees and the definition of business, which business you are in, and sometimes the seemingly clear answer are not the real answer. For example, a pharma company saying that I'm providing medicines to treat the patients, to now telling that I'm providing solutions for health of the citizens. I think it makes all the more difference. A garment company saying I'm providing clothing, to a garment company saying that I am giving you lifestyle and your identity. I think in a very, very different kind of business. Then the range of business when the company can enter into or can compare itself with, I think changes. Like many times the banks say that their competitors are no other banks. Their competitors are some startup companies like Amazon and other of the world who can come into any kind of business. So that's one important thing which CFO needs to keep. The second is there's so many regulatory changes, and regulatory changes I would talk one like ESG, which was talked about. I think across the world, the governments and all authorities want that all the organizations should care for the next generations to come, and therefore, do the business in a particular manner, as the responsible citizens. The second comes in terms of like corporate governance aspect, like while in ESG, Gs are there, always there. But to talk specific, the way SEBI is, for example, coming out with various regulations, including related party transactions, the appropriateness of CEOs pay, the minority activism that we have seen in G and other groups, I think there are the new things which CFO needs to be aware about. And the third is the technology. While it is talked about, I think the technology is changing much faster than the way even CFOs recognize and would like to accept, because that challenges their own belief. And therefore, they need to be people who decipher both lead and lag indicators of technologies, where it's going and how fast we can catch with them. I think these are the new set of skills required for CFOs.
Okay, very valid points, Nitin. Niranjan?
My co-panelists have already summarized what is required of the CFO. But in fact, I remember there's something I had read about some of the key deliverables of a CFO, right? And it's something that I have read somewhere. So this is not my own summarization. So they have to be a creator, which is a strategic value creator. They have to be an enabler, which means the enablers of the value creation. So which means supporting the stakeholders in making decisions and understanding the performance. They also have to be preservers. So for example, they have to preserve the assets on the balance sheet, protect the value, and that will come through risk management, that will come through internal controls in terms of protecting. And then they also have to be the reporter of the value, so which is the financial statements that gets prepared, right? And so in many ways, I think it's a multi-dimensional role that a CFO plays. And I think Pankaj also mentioned very clearly about it. You have to be an economist. You have to understand compliance. You have to understand cost, tax. You have to understand where business risk is emanating from, which area. And I think I just wanted to emphasize the point, there is technology intervention that's coming through, and therefore the understanding of tech. I think therefore it's important that I think one skill set that CFOs need to have is to identify right talent and have people across all these functions to enable the CFO take the most prominent decisions and important decisions, right? And therefore, he also needs to wear the HR hat in therefore identifying the right talent and ensuring that the talent helps culminating all those decisions towards the eventual objective of the bank. A lot of times, at least in my younger days, I've seen the focus being only on just, let's say, numbers. I've kind of not seen the empathy part that Ruchit did mention. I think those are also areas that the CFO needs to bring into the table very clearly, right? So move from the cost to the revenue and eventually to the organization, and not just stay within the P&L balance sheet of the institution.
Noted your points, Niranjan and Ruchit. Your view, I think your view is going to be very important for me, considering startups had a different vision, but after the downfall, after the listing in a lot of startups, they have changed their strategies now. So, what is your suggestion? Because previously the idea of the startup was to raise more funds and build a value, but now they realize, and you also partly mentioned that business is very important. So, what is that the startup CFOs should keep, carry in while entering into the future?
Look, I agree with everything that has been said, and I wish and I hope and pray that I'm able to deliver at least a few of those myself. But I think my checklist is much more mundane, I would say. Look, I want to, if you think of a startup, right? I think gone are the days where you just chase valuation. You have to first remember you have to solve a genuine customer problem. And if you have an elegant solution, a product market fit to solve it, then you can scale up, right? And I think recent success stories, recent debacles have proved that even large companies may not necessarily do the right thing always, right? So what that means for startup is that we have to just become more relentless in figuring out a solution and ensuring that we are executing to the best of our capabilities. I think gone are those days where we can just relentlessly chase growth without thinking of profitability at all. When we have been, in this country over the last 5-6 years, we've always felt it's okay. We continue to raise capital and therefore let's just chase the top line and forget the bottom line. I don't think it's true anymore. It hasn't been true since Corona. Corona forced the entire globe to basically look at the bottom line, whether you wanted to or not. But now it's here to stay, of course, right? But from a more mundane checklist perspective, where I struggle the most is just attracting and retaining great talent. It's while we are in a country where still talent is easily available. When I enter these other countries, we have gone into 5 more countries outside India. It's just impossible to find even the talent that India has. So nurturing them, creating decision makers out of them is a little more mundane on my checklist. I think another one that I think everyone has touched upon is, as a startup, we have probably not really understood the meaning of true risk and controls and internal controls and corporate governance. We listen to it, it registers in our mind, but we don't follow it, right? We don't follow it in spirit. And that's something that we, as a startup, as a community, need to be more cognizant of, right? So in our company, for example, from last year onwards, we've started pushing ourselves to think like a public company, even though we are not, because it will take us years to mentally make that transition. And if we don't do it, then my teams don't do it. And as a company, the DNA doesn't change. So the purpose when I meet with someone like a Nitin or a Pankaj or Niranjan is to learn what does risk mean? What does control mean? And does that, for example, stifle my business growth? If the answer is no, then why shouldn't we do it? Right? So I think that's another area as a startup CFO, I would love to understand more and with the right intent actually execute. And I wish startup community in general starts thinking about it.
Okay, valid points, gentlemen. I think it's been more than 15 minutes. I wish I could have taken a few more questions, but the time is limited and the watch is already ticking. But I must say, this has been a very insightful session. I learned a lot personally, and I'm sure the people, those who are watching this session, must have got a sense in terms of, what should be there and how the future CFOs look like. So thank you so much, Ruchit. Thank you so much, Pankaj. Thank you so much, Niranjan. And thank you so much, Nitin, for sharing remarkable insights at ETCFO Leadership Summit. Thank you so much.
Thank you. Thank you for the opportunity.
Thank you.
Excellent. Thank you so much.
Thank you everyone for such a detailed discussion. Every point shared is alarming. Now let's move on to our next session and gain more knowledge.